Jackson Hole and lots of data. While in the past 2 weeks pressures on Fed for more aggressive policies decreased, this week Jackson Hole Symposium and Friday's personal income and spending numbers will tell us more about the fate of inflation. We shouldn't forget that even if inflation fears get less, potential recession can still be scary. We should prepare for a busy week with lots of data. Let's review the most important events and data to watch with me, Ahura, and IFC Markets. Number 1. People's Bank of China. We are expecting to start the week with another rate cut in China, as the latest published data show that industrial and manufacturing production, retail sales, and personal spending are getting weaker in the second biggest global economy. Therefore, it's likely to see that the People's Bank of China increase the supporting level with 10 basis point rate cut. This estimated policy is supposed to help the Chinese stock market and put the pressure on yuan. Number 2. PMIs in Europe. European PMIs, including the UK numbers, will be released on Tuesday. In recent months, both manufacturing and service sectors have been under pressure, especially in Eurozone. With sharply increasing CPI above 9 and 10% respectively in the Eurozone and UK, it's very likely to see weaker PMI numbers and less economic activity. We expect these elevated price pressures to continue to pressure growth and sentiment in the following months and increase the possibility of falling into recession as energy supply issue and prices diminish the consumer's purchasing power. Data will add pressure on the stock markets. Number 3. U.S. new home sales. The housing market with the higher mortgage rates and prices is losing affordability and pushing prospective buyers to the sideline. In 2022, until June, new home sales were 17.4% less than the same period in a year ago, and the decline is expected to continue further in the year's second half. With these predicted data, housing price should reduce and help the inflation to ease in the midterm. At the same time, weakness in the housing market will not favor the stock markets either. Number 4. U.S. durable goods orders. While published data confirmed the slower economic growth, durable goods orders rose at the fastest pace in 6 months in June, up to 1.6%, and is expected to advance another 1.1% in July. Data show that Boeing orders increased by 100 new orders in July, the most significant monthly volume in a year, and it is the primary driver of durable goods orders. Excluding transportation, durable goods orders increased just 0.1% in July. Estimated data is supposed to increase the US dollar safe haven demand. Number 5. Jackson Hole Symposium. Stock markets increased in the past 2 weeks, with stocks hitting a 2-month high and S&P 500 tested the highest price since late April. However, in the last days of the previous week, FOMC members' comments about inflation and the following rate hikes caused pressure on the stock market. Now, eyes will turn to the 3-day symposium in Jackson Hole in the north of the US to learn more about the possible central bank's decisions, especially in the US. During these days, market volatility will increase. And finally, number 6, US personal income and spending. While the supply chain issue is getting solved, consumers are spending more on services than purchasing goods, and data show that incomes are increasing and inflation is decreasing to some extent. We can expect consumers to spend a little bit more. Overall estimates are to see personal spending and income both advance by 0.4% in July, which can increase the possibility of aggressive reaction by Federal Reserve and add pressure on the stock markets. Thanks for watching this video and hope it's going to be an amazing week for all of you.